Welcome to Meeting of Minds with Jerry Bowyer. I'm talking today with my friend Steve Forbes. Steve is the publisher of Forbes Magazine. Actually, Rich Karlgaard is the publisher of Forbes Magazine. You're CEO and editor-in-chief. Is that right, Steve?
Chairman and editor-in-chief, but my brilliance does not match that of Rich Karlgaard's.
Well, Rich, he certainly has his gifts and his talents, but so do you. Has Rich won the Crystal Owl 3 times?
Well, he didn't enter the contest, so I had an advantage.
He stayed out because he didn't want to overshadow you. And you've written a number of books, New Birth to Freedom. We're talking today about money, the destruction of the dollar, and how the destruction of the dollar threatens the global economy and what we can do about it. I just like to think of it as the money. Steve Forbes, money. And Steve, I've been listening to What's Ahead, which is your new podcast commentary, and really enjoying it. To me, it's a must go to every day. Short commentaries, 2 to 3 minutes, almost every day.
Thank you. Thank you.
And lately, you've been talking about oil prices maybe going over 100 and inflation and how the Fed doesn't understand inflation. Can you kind of unpack that for us? We have more than 2 minutes, so you can just, let the horses run. Go for it. Tell us what you're seeing there, please.
Well, the Federal Reserve doesn't understand inflation. The classical definition of inflation is when you lower the value of a currency, in this case, the dollar, which causes all sorts of problems. And then that has to be distinguished, Jerry, from changes in prices as a result of supply and demand. Right now, we're seeing a lot of price changes because of the disruptions of the pandemic. Supply chains were severely disrupted. The way things were done was disrupted. For example, during the pandemic, a lot of people decided to do repairs around the house and maybe expand. So the demand for lumber went up, but with the pandemic, lumber production was going down. So you had a huge surge in lumber prices. That was a change in the value of lumber. It had nothing to do with the value of the dollar. So we have to we'll talk about unpacking. You have to make distinctions between normal price changes or price changes as a result of extraordinary events like the pandemic or many times in the past a financial panic or natural disasters. But what I think we're seeing unfolding here is when the Fed is right that some of these price changes will sort themselves out. But what the Fed doesn't understand is that when you lower the value of a currency, you change the price signals in the marketplace. Instead of getting a dozen eggs for $3, you're only going to get 10, and you don't know why. And so it's like a virus in the computer. It corrupts the information. And this usually comes about when a central bank like the Fed prints too much money. It's compounded here, Jerry, by a strange belief the Federal Reserve has, and it's shared by most central bankers, and that is inflation. And this is where they don't understand the difference between price changes from supply and demand and price changes from the change in the value of the currency. The Fed believes that prosperity, good times, causes inflation, that when the economy is doing well, that bumps up prices. And therefore, since they regard the economy not as a collection of individuals interacting with each other, but as a machine, they therefore have to cool things off. Otherwise, the economy will overheat. And so they try to create unemployment. They believe this, what they call the Phillips curve. It's not a baseball pitch. They believe that there's a trade-off between inflation and unemployment. If you want low unemployment, you have to have higher inflation. If you want lower inflation, you have to have higher unemployment. Now, history and experience and a number of Nobel Prize winning economists have all shown this is absolute nonsense. But nonetheless, the Fed worships at the shrine of the Phillips curve. So when you look at price changes, you have to ask, let's say the price of corn goes up. Is the price going up because the value of corn is going up? There was a drought or something, or suddenly everyone wants to eat corn? Or is it because the dollar value is changing, the dollar gets weaker? We saw back in the 1970s, oil go from $3 a barrel to a high of almost $40 a barrel. And because that was corrupting market information, a lot of people thought, gosh, we must be running out of oil. There must be a shortage of oil. And so we better ramp up production, try to find substitutes for it. And then in the early 80s.
So it was the money illusion. leading us
money
to
illusion.
a whole generation of movies like Soylent Green and a whole generation of the renewal of a Malthusian philosophy. We're running out of resources when in fact it was a corruption in the information system. The unit of exchange, the numeraire, was distorted in value, and so we took the wrong lesson from those spikes in oil prices.
That's right. It wasn't so much that oil got more valuable or copper suddenly became more valuable. It was that the dollar became less valuable. The dollar became weaker. And in the early 80s, when inflation was crushed by Volcker, Paul Volcker, then the head of the Federal Reserve, our central bank, guess what happened to the price of oil? It crashed, went down to about $10 a barrel, finally settled in a few years at $20 to $25 a barrel. But the problem, Jerry, is when you have these long periods of price distortions, it leads to a bad investment. It misdirects capital. And we saw that in the early 2000s when, again, the Federal Reserve and the Treasury Department decided to let the dollar weaken just a little bit to goose things up, Phillips curve thinking, and the idea that if we cheapen the dollar, that'll increase our exports. So they let the dollar weaken. And guess what happened? Oil went up from $20, $25, reaching a peak of 100 or so, even more. You saw the housing bubble, which led to a catastrophe in 2008, 2009.
Right.
So when these things happen, it has bad results. Back in the 1980s, we think of Texas today as a nice, prosperous place, even if it is too hot right now. But back in the 1980s, it was a depressed part of the nation. They had a real depression in the aftermath of the energy crash. So these things have malignant consequences.
And Mellon Bank here in Pittsburgh was over-invested in Houston real estate. And so there was a wave of bankruptcies that just swept across the country. And I remember there was a lot of unrest here, partly over that. So this isn't just economics. This is social, and it's pervasive, and it gets downstream, and it gets into every little nook and cranny of the economy and the society in distortive ways. And maybe one person in 1,000, and I'm being generous, understands that, why do we have this Arab Spring thing going on? Oh, well, grain prices, tortilla riots in some places, wheat, prices in other places, that these monetary distortions, they wreck many more things than just what we think of as traditionally economic things.
Well, that's right. And this gets to, we think of inflation, as you touched on, economics. But as you well know, as you just said, it's more than economics. Economics, by the way, is people interacting with each other. But so it's not some strange beast out there. But markets are people. But also it affects social relations. If money is stable, we can do transactions with people we don't even know, we may not even see. And this wonderful way of people coming together with no central direction, what we now call supply chains, producing all these products and services from all over the world, making these great innovations. And money gets to social trust. We can trust other people, not because we know them, but because we are able to trade with each other. And when you trade with people in the marketplace, what are you trying to do? You're trying to sell you something. So I may look at Jerry and say, gee, I wish Jerry'd shave that beard, but I want to sell him some life insurance. So I'm going to be nice and find out how I can persuade him to part with his resources to buy the life insurance policy I'm selling. And so without you knowing it, you may not love your neighbor, but you want to sell to your neighbor. It breaks down barriers between people. And it makes, contrary to what the Marxists say and these new socialists would believe, it actually increases and enhances humanity because you're cooperating and you don't even realize how it is happening. It's extraordinary.
I think I learned this from you. Tell me if I didn't, in the book Money, or maybe your documentary about money. We all know about Kristallnacht, right? This populist, manufactured populist uprising of Nazis,
totally
in Jewish neighborhoods. But who stops and asks why windows? Why break windows? I mean, they could have broken doors mainly. They could have mainly burned down things. There's lots of ways to express anger. Why were they breaking store windows? Because they were demonizing speculators and middlemen for hiking prices when in fact it was their own monetary authorities and their own debasement of currency that led to these price hikes. So, I mean, something as noxious as anti-Semitism in Germany has this breakdown in trust associated with the lie that fiat currencies tell about what's going on in the world.
That's right. And it started to be really fueled. Sadly, anti-Semitism is a long trait in Western society. But it took a especially ugly and malignant turn after World War I, when Germany thought it was winning the war right to the end, and therefore was stunned when they ended up losing the war. They thought they got an unfair treaty. And so they blamed the November criminals, and Jews and other conspirators stabbed the mighty good German soldier in the back, Hitler. Right. That was the theme of Hitler from the very beginning of his malignant career. And then with the inflation, one of the things about hyperinflation is, as Keynes said, he got some things right. As Keynes said, it goes against all the productive, positive laws of economics and turns them upside down, so that it's the speculator who gets rich, while the hard worker, the person trying to produce products and services for the marketplace, who ends up getting damaged and wiped out. The people who played by the rules got hurt the most. And so it turns societal trust again, corrodes it, corrupts it. And so thankfully today we're nowhere near those terrible conditions that we saw in Germany in the early 20s, or even what we experienced in the 1970s, a bad decade economically and for America's morale. We thought we were in a nation in decline. But the thing about inflation, Jerry, is it doesn't go in a straight direction. It comes, it's like a virus. It comes, flares, and then recedes, and then comes back even worse. That's what happened in the 70s. We had 3 or 4 rounds of inflation, each worse than the last, before it was finally killed by Volcker in the early 1980s. So I wouldn't be surprised if the bump up in prices we're seeing now, after a few months, recedes again.
Yeah.
But the Federal Reserve, since they don't understand inflation, since they're going to undermine the value of the dollar, we're going to see it come back again. And people are not going to understand it, because the Fed has told them what you're experiencing now is just
transitory.
Transitory because of the pandemic, COVID-19. But by golly, it'll sort itself out, and we'll be on our way to eternal happiness.
Well, I'm glad we're talking about now, right? Because what I find is that the people who are on guard against inflation, like a lot of our friends in the Austrian economics movement, tend also to be somewhat given to false positives and to running scenario of hyperinflation without, and again, false positives of that. So as I look out there at the discussion, I hear people talking about hyperinflation. I hear people talking about, this is it, right? This is the big one, like Sanford and Son, this is the big one, Elizabeth. And then I hear other people basically saying, look, it's fine, everything's fine. We don't really have inflationary risk. All those people who've been predicting hyperinflation before were wrong. Therefore, we can write off inflation risks in general. And what I'm hearing from you is a more moderate approach, which is an elevated risk of elevated inflation, not hyperinflation, but not the sanguine, inflation's a thing of the past, we're not going to get it anymore. Look at all the times we didn't get it in the past decade. Have I got the Steve Forbes position right on this?
Yeah, hyperinflation, thankfully, even in the 70s, where we had a really bad rounds of inflation, it wasn't hyperinflation, prices increasing 40, 50% a month, as you see in Latin America, Argentina, and Lebanon, some other places today. But it can be very, very destructive. So the fact you have a mild form of the disease, you have a very serious disease, and it can have some very destructive political consequences. Now, one of the reasons why a lot of people say don't worry about the inflation is they looked at what happened after 2008, 2009, when the Federal Reserve vastly, enormously increased its balance sheet,
right?
Increased the money supply greater than it did in the 1970s. So people are looking at those numbers saying, here we've seen this movie before. But what actually happened was a one-time historical event. And that is, leading up to 2008, banks had been leveraging, adding more debt. and not having the kind of reserves that a bank normally would have in the old days. They thought with technology and their sophisticated instruments, they didn't need those kinds of cushions anymore. So after 2008, the regulators pounded the banks, and the banks were hiring more compliance officers than loan officers.
Yep.
And so they were spending years replenishing and strengthening their balance sheets. And so the reserves, these massive amounts of reserves, bank reserves created, in effect, were put in the deep freeze because the Fed, for the first time, was paying interest on those reserves. Now, reserves are the excess money that the banks park at the Fed each night. If they have no need for them, they're not lending them out or something. But so the reserves increased enormously, but they were repairing the damage done before 2008. Well, that period is well over. Even what they call Basel III, if you want to, it's not something you put on pizza or something, Basel. It's coming out of Switzerland, where the world central bankers came up with, and regulators came up with what they thought were international conditions for bank capital. I think it's a wasted exercise, but anyway, they did it. But anyway, Basel III is over. The banks are in tip-top shape in terms of capital, and
so it's not the stuff you put on pizza.
No,
but they're both kind of a pesto, though.
I'd take the pizza over what these central bankers do any day. But the thing is,
let me stop.
This event is over.
It is, and so's the stress test thing. Which I remember Janet Yellen telling Congress. Some of the members of Congress asked, "Well, what do the banks have to do to pass the stress test?" And she said, "Well, we can't tell them how much capital they need to put aside. That's not a test if we tell you the answer," which of course is silly. It would be perfectly all right for them to say, you need 20% set aside, or you need 15%. By leaving it ambiguous about whether you're going to pass the stress test or not, by not telling them what to aim for, they over-reserve because no one wanted to go to prison or get shut down or have the regulators take over. So the money stays in the vault. Let me say it a Bowyer way. If inflation is too much money chasing too few goods, so that the increase in the supply of circulating money is what causes inflation. That's the simple answer. And so a bunch of our friends said, we're going to have super high inflation because the Fed quadrupled its balance sheet. And you and I didn't say that, because in order to be inflationary, it has to circulate. It can't, if it's locked in the bank vaults, if it's not in the consumer markets, it's not inflationary. And not only that, but in order to be domestic inflation, it has to circulate domestically. So if foreigners hoard dollars as counterparties, if they hold a huge amount of dollar reserves in the Eurodollar market, that's not very inflationary here domestically. It's got to come back home. Or if banks hoard it in their vaults, that's not inflationary. But I think you're saying in terms of bank regulation, we're past that hyper hoarding. And I would suggest that maybe in terms of holding dollars overseas, that we might be past a hyper hoarding of dollars overseas too, that the world might be losing a little confidence in the dollar so that some of those dollars might be coming back. What do you think about that?
Well, certainly they don't seem to have the appetite for U.S. government bonds that they had a few years ago. We'll see how that unfolds if Congress passes these crazy spending bills of President Biden, and they have to figure out how to finance them. That's when the rubber hits the road, so to speak. But in terms of the bank hoarding, that's a nice way to put it. Yes, and so now the banks want to lend, and at the same time, you have this massive liquidity in the world. And that's why, and then you have interest rates which are negative, which has never happened before in history. And you have these anomalies in the marketplace. Why in the world would an Italian 10-year bond have a lower yield than an American 10-year bond? It makes no sense at all. So you have these massive distortions out there. You have literally trillions of dollars of bonds being bought, subpar bonds, junk bonds, of companies, not companies that, as Michael Milken did back in the day, that were thought to have prospects in the future. They had a low credit rating today, but people thought they had a great future, so therefore you would buy the bonds and get a juicy yield while waiting.
Right.
this time, a lot of companies that are on the edge are able to get mountains of money at very, very low rates. So again, this is a misallocation of capital. So you put this massive amount of liquidity out there, people trying to put it to work. And once we get over we finally recover from the distortions of the pandemic, then I think we're going to see some real problems out there as the water recedes, so to speak, and a lot of these companies are not going to make it, and somehow it's going to start to unravel. And
so has the distortion of the pandemic, created such a low baseline of 1 year ago that the current year-over-year inflation numbers might be exaggerating? I mean, part of this is cyclical, right? I think we both agree. I think we're both concerned about inflation, but I think we both acknowledge that one of the things that's going on is a little math thing where if your base is really low, is artificially low because you shut down the economy, that you're going to get year-over-year changes that might not reflect, the pure reality of inflationary policies, might also reflect that distortion, right? So in some cases, that's made the hawks a little too bold, in their feeling that, see, we've proven right already. They don't know that, right?
Yes, and then you get into crazy things like cost push inflation, labor-induced inflation, all that kind of stuff. And after World War I and World War II, especially after World War II, you had major disruptions in an economy that was totally geared to producing weapons to save civilization. And after the war, it took 2 or 3 years to go back to a truly civilian economy with a much fraction of the defense forces we had before the end of the war. And during that period of time, you saw the cost of living seemingly rise up. Well, why? Because during the war, they had rationing, so you couldn't buy stuff even if you had the money. And also, there was the production was not there. We couldn't buy cars. We were making tanks and tanks and airplanes and armored vehicles and all that kind of stuff. And so after the war, it looked like there was inflation, but it wasn't inflation. The dollar was fairly stable. It was readjusting. And so that's the kind of thing we're seeing after the pandemic. And I think we kind of underestimated the distortions because we live in a global economy. And what it did to other nations was, in many respects, more severe than what we went through.
So we might have underestimated the supply chain disruptions. I'm glad you mentioned World War II, because I've been arguing that this recession, depression, whatever we went through, is unlike anything that we've had in my lifetime or your lifetime, that the only analogy I can find is the rationing, it's not a perfect analogy, but the rationing regimes in World War II, where people were essentially forbidden, demand was outlawed. Right, so when you have the outlawing of demand, you're not allowed to buy it, right? Or when you have the outlawing of demand, you get completely different dynamics than when you have almost all our recessions are supply side recessions. Government messes something up, creates a bubble, raises taxes, and we shrink production. But in this case, we essentially ordered people not to consume. It was rationing across the so the analogy
and enforced by price controls and wage controls.
Yes.
And the wage controls, since a big chunk of the labor force was going off to Europe and the Pacific, taken out of the civilian economy, you had companies wanting to pay existing workers more to try to meet a labor shortage. So you had a lot of women go in the labor force, but so that's how you got the rise in a big way of company-paid healthcare plans.
Right, and we have there's another similarity. We have a wage shortage now, a labor shortage now, created by the government paying people not to work. So, yes. So I think you're really onto something. I'm sure you're thrilled to hear that. I think that with the analogy of the price dynamics after World War II, because that's the most analogous to what we went through. And a lot of those price increases weren't really inflation in the classic sense. They were bounce backs from various distortions.
Yes.
Right.
And so what you see today is a confluence of both. Now, the Fed has weakened the dollar somewhat in the last couple of years, and you saw it in the gold price, which was gone from roughly $1,200 to $1,800 an ounce. not good, but not bad. And so you have a little bit of the mix of inflation. But the key thing is, where's the Fed going from here?
Right.
And
after World War II, we rolled into Bretton Woods. We do not seem to be rolling into a Bretton Woods kind of mentality right now. Quite to the contrary.
Yeah, in Bretton Woods, we fixed the dollar to gold, $35 an ounce, and every currency was tied to the dollar. So every currency, major currency, was in effect on a gold standard sort of once removed, but it was still a standard fixed by gold. That is using gold as a metric of value. That you wanted to keep how do you keep a currency stable in value? Well, gold's the best proxy we have on Earth. Not perfect, but the best one we have, better than anything else. And several thousand years of experience so far have proven it. And maybe tomorrow somebody will figure out how to make globs of gold in a laboratory, but so far they haven't been able to do that. So you might, in modern parlance, no one's figured out how to hack gold yet, as they seem to do everything else.
Isaac Newton tried.
And the like.
Right.
And they've never, for years, they kept trying, which, by the way, helped lead to the rise of Western science, that kind of experimentation. But anyway, the Fed not understanding inflation, the danger is, given the extraordinary conditions, they could end up lurching into it, and especially given the massive distortions since 2008 that have held back economies here and around the world, which is one reason why I think we've had some of the political craziness, because people have not seen a vibrant economy free of distortions. So the kind of economy we experienced after the early 1980s, a lot of young people think it's just one crisis after another, and therefore it must be capitalism, capitalists who are the cause of it. You know, Jeff Bezos, we couldn't have existed without Amazon during the lockdowns, but by golly, he's a villain. You know, they're comparing him to Lex Luthor, and
it's the hair. It's the the hair thing.
Yeah,
it's
and so they don't want him to come down from space when he goes up in his rocket ship.
Yeah, I mean, and it's not just, by the way, little side tour here. It's not just the Democrats anymore. So I'm going to, put you a little, maybe this is an uncomfortable position. I hope not. I'm very concerned about the rise of a default knee-jerk anti-corporation, anti-business populist impulse among Republicans now. I mean, you can almost always count on the Democrats, at least. I mean, you had a Clinton and JFK once in a while, but generally you could count on Democrats to kick corporations. They're bad. They're capitalists. But now, like a Marco Rubio, some others, there seems to be a kind of a similar attitude in the Republican Party. I mean, you seeing that, or is it my imagination, and are you concerned about it?
Well, it's really a reaction to what you might call big tech. And here is where the leaders of those tech companies have behaved, I think, extremely irresponsibly. Regardless of what the law books say, you must have at least the passive acceptance of the public to exist. And in the 1800s, for example, the railroads gradually were seen having a public be damned attitude, euchering the farmers. Not all of them did it, but they got a bad reputation, which led to the government to create the first independent agency, what they called then the Interstate Commerce Commission, regulating rail rates, which ended up screwing up the industry to the point where by the late 70s it was all going bankrupt. Then they deregulated it. Started, by the way, under Jimmy Carter, amazingly. Yeah. And we now have the greatest freight system in the world. Everyone focuses on bullet trains, but the real purpose of railroads is moving freight these days, and we do it better than anyone else in the world, more efficiently than anyone else in the world. But those leaders of those companies going out of their way to kick sand in the face, to kick the shins of people of the center right is just asking for trouble.
I agree. It's irresponsible.
It's irresponsible to their companies, to their shareholders ultimately, and to the country, because you are going to get something bad done. And they talk about doing away with Section 230. Right. And you got to be very careful when you do those things. The law of unintended consequences has not been repealed. And you have Clarence Thomas and others saying these companies are common carriers, which means they should post anything and everything that's not illegal. Well, we have to be careful. That doesn't lead to another version of the fairness doctrine, which
Yep.
was used to keep conservative views off the air. We never would have had Rush Limbaugh if we hadn't had repealed the so-called fairness doctrine. So with the Republicans, I think and I've certainly tried my part to hammer home to these people, you are being very destructive. And fortunately, and this is something
when you say these people, you mean the big tech CEOs or the Republicans? Yeah, right.
No,
right.
The big tech CEOs.
Right.
And I always cite the example of the old AT&T. Back in the days when Ma Bell was a legal monopoly in this country because they thought telephony was a natural monopoly. And AT&T, before the early 1980s, when it was broken up, went out of its way to make everyone happy.
Yes.
The service was the best in the world. They didn't care they were going to make sure you had good service, keep everyone happy. Every newspaper, Jerry, radio station, magazine, and TV station had ads from Ma Bell, from AT&T. They covered all their bases.
Trying to win our trust back.
And when candidates ran for office, AT&T would immediately be in there and put in the phones. If you campaign failed and you didn't pay your bill, they didn't try to put you in jail. So AT&T went out of its way to keep everyone happy. That's what these people should do. When you reach a certain size, you better try to, in a positive way, to make sure you're not undermining public acceptance of your existence and size.
Well, for the past couple of months, I've done a little project, which is, as you know, I work for an institutional shareholder. I've been attending, virtually, the annual meetings of the companies that are in the indices that I help design and maintain. In other words, I'm trying to be a citizen. Instead of complaining about these companies, I'm using the authority that I have, right? And I've been talking to some of these technology companies and pointing out to them exactly what you're saying, which is, do you understand that you had one party that you had a decent relationship with in Washington, and you have almost destroyed that relationship? You think that going against ESG or going against wokeism is managing risk. No. Cancel culture is now probably your biggest source of political risk. You're going to have no friends left in DC. So be neutral. Some of them are listening. A lot of these conversations are off the record, so I can't say more. Some of them are listening. Some of them aren't. They're just acting like they're privately held companies rather than publicly traded and pursuing their own political agenda. But in the end, they're going to end up being treated like utilities if they keep abusing their power. That, on the other hand, is no excuse for conservatives to take a knee-jerk anti-corporate. The problem is not the corporation. These companies are marvels of innovation. The problem is the misuse of shareholder resources pursuing their own political agenda. But Apple is a marvelously productive company, even when they do this stupid stuff. So I still love the idea of a technology corporation and see it as a great blessing to mankind. I just don't want them to do the stupid thing of making enemies unnecessarily.
And fortunately, and our friend George Gilder will reassure you on this too, is instead of trying to destroy these companies, what we should be doing is destroying the barriers where new technologies and new ways of doing things emerge. And there's a lot of work to be done there, starting with the capital gains tax, which if you can't eliminate it, you should certainly knock it down to a fraction of what it is today. And doing these stupid regulations that stand in the way of the creation of small businesses. Small business, new business creation in this country dropped after the 1990s. Carl Schramm and others have written on it. He found that we went from roughly 800,000 startups a year down to 400,000 or 500,000. It started to improve in the Trump years, and now COVID has slammed it again. And the Biden administration is doing its best to make sure that environment doesn't get recreated for small businesses. But you do that, and some of the huge technological changes are coming. Put these companies in their place.
Is blockchain, you think, the main thing that's coming to put these companies in their place?
Blockchain could do it, some variation of artificial intelligence. And also, you're starting to see signs that for the first time in a long time, and this is where you need a benign environment, the legacy industries will be helped by high tech. i.e., why today, despite the improvement in aircraft, does it take about as much time to go from, say, New York to Los Angeles and back again as it did 40 years ago? What happened to supersonic technology? Well, it's been there, but it just has never been developed and refined. Well, that's going to change now. And so we're going to start to see changes in physical things. As Peter Thiel likes to say, atoms are not just bytes. And but that won't really flourish if we put up stupid barriers and have crazy new entitlements, not crazy, but well meant, but entitlements that are going to make it impossible or certainly hinder this kind of innovation that will put these companies in their place. And just to quickly go through, I'm old enough to remember when GM was the big bad industrial company, could take over the whole US auto industry. Ford and Chrysler survived at the sufferance of GM for antitrust purposes. Well, we saw where that led. IBM was the big bad high-tech company. By the early 90s, had one foot back in the corporate graveyard. Thriving company today, but not the fearsome giant it was 35 years ago. And Walmart, remember when that was the big baddie? Then along comes Amazon. Suddenly Walmart is the David against the Goliath of Amazon. And so on it goes. So yeah, you got to go against misbehavior. That's fine. But bigness in and of itself is bad. And what the Biden people want to move away from is one of the things that arose about antitrust, which is misbegotten anyway, the way they do it. But they did realize that if a company was reducing prices, then its size wasn't a bad thing. If consumers weren't being demonstrably hurt. Because monopolies are always supposed to be, they take over and then they jack up the prices. So if that's not happening, you don't lose sleep over it. But now they're saying, oh, but it has social consequences.
And it's predatory pricing now, right?
Predatory, yeah, predatory. And so
not to the consumers, it ain't.
They just don't like you. They want to control you.
Yes, interesting. I guess now the David's stone is the little wafer of silicon. That fells the Goliath. And I do wonder if the next stone is a little block. I mean, I don't know. That's what our friend George Gilder thinks, and he knows 10,000 times as much about this stuff as I do. I certainly hope he's right. Let's come back to the Fed now. I told Vernon Smith that we'd be doing this interview today. Vernon won the Nobel 2002 for inventing behavioral economics, and he brought up an interesting point, which is that he wanted me to bring up. The Fed basically last week said, well, we're probably not going to be buying as many mortgages, but we're going to be buying as many treasuries. And so what he's raising this fascinating issue, which is if the central bank hyperfunds government, lowering the cost of capital to zero, but doesn't likewise hyperfund the private sector. I don't want them to hyperfund anything, but if they do that, it's essentially a form of nationalization in that it shifts economic resources from the private to the public sector without actually having to nationalize anything or seize anything or regulate. It just reallocates the capital almost quietly, and that's a de facto deprivatization and portends bad things for the future. What do you think about Professor Smith's theory on this?
One, when you have a misbehaving Fed combined with a government determined to misbehave economically in terms of taxation, regulation, and the like, spending and the like, then you destroy capital. You destroy private capital. Remember, most wealth is the value of assets. It's not cash sitting under your bed or in a bank vault. It's asset value. So if you have a hostile environment for productive creation of assets, guess what happens? Wealth disappears, poof, like a puff of smoke. And I guess I shouldn't use that analogy anymore since smoking is bad. But anyway, the fact of the matter is you destroy capital.
Puff of vape. It's vape.
Well, the government hates vaping too,
true.
Strangely enough. Another subject for another time. Strange. But so it destroys capital and it destroys the creation of capital. So Vernon Smith is right. And one of the things that socialists learned a long time ago is, unlike what they thought after World War II in Britain, that you nationalize all the means of production, it's far better and cleverer to put in regulations and other measures where your survival depends on the sufferance of politicians. And therefore you get the blame when things go wrong, because the politicians, oh, we're not in charge. It's those evil companies that are in charge. And at the same time, you in effect control the economy. And so that's why what the far left is doing, they want power more than they do prosperity. And that's why these measures, which are demonstrably anti-growth, like raising the capital gains tax for crying out loud. We know from experience.
We won't get new revenues on that.
We lose revenue.
Right.
So here they were going to enact a tax that's going to lose revenue when they say, oh, we desperately need new revenue. They're doing that as a matter of control. And this thing of increasing the size of the IRS, adding 80,000 new agents, and then leaking those tax returns, and showing, in one sense, they showed absolute economic illiteracy when they took those tax returns and then took Forbes Magazine's estimates of their wealth and concluded they weren't paying enough tax. I mean, talk about mixing apples and oranges and God knows kiwis or whatever.
Right. Net wealth is not the same as income. You tax income, right? So the base should not be net worth.
But that was they knew what they were doing. They wanted to create an environment where people would say, we better tax more, i.e., tax. The next step is taxing wealth. And the thing about taxing wealth is it's not just seizing what you might own. It's monitoring and examining everything you do. One of the things the IRS now wants to do, it's in the bills, is have you know what your bank flows of cash in and out, not just your income statements, but the flows of money in and out of all your financial accounts. And then the next thing you want to know is, what are your assets? Do you have a piece of art hidden somewhere? It's all about control. In a way that George Orwell couldn't have even imagined.
Didn't we do a wealth tax in 1937? We tried to, and then we tried to pack the court, and then it passed in 1938. And our friend Amity talked about the depression within the depression when we got the wealth tax. I mean, that's incredibly destructive of value for everybody.
It is, and countries that try it end up realizing it doesn't work. But these people don't care if it doesn't work in a narrow sense. This is, again, about control. Knowing what you're doing. If you want to do something, you have to have their permission. And so it's a very malignant thing. They're not interested in recovery. They're interested in more power for themselves. So it's any means to do it.
So ruling class, there's a Nietzschean will to power, but their ability to do that is limited by our embrace or not embrace of the vice of envy. In other words, our envy can be exploited by them for their power. If we don't have larceny in our heart, then they can't wave the wealth tax in front of us to kind of get at the evil rich men. It won't work. So we as a people have to abandon. I guess I'm really moving towards something else. Can we avoid the sort of things that you and I are concerned about without some kind of genuine cultural, spiritual, moral renewal, civil or whatever in our country, that makes us not so vulnerable to manipulation by these elites that you're using cynically, but we're giving into? Because you can't cheat an honest man, right? So, don't we have to change as a nation in order to resist what our leaders are trying to do?
Well, we have to go about changing, fighting the narrative, and not letting them have a free pass as they've always done, and saying, well, we may mess things up, but our hearts are in the right places. We're trying to help the people, and learn to fight back in big ways and small. And one of the things, and that government can't do that. This is something that has to be done by we the people. In closing, a classic case is liquor. Between the Revolutionary War and the 1820s in this country, we had a massive increase in liquor consumption. And while it's comedic to see, people drunk at noontime stumbling over each other, it had very predictably evil social consequences. And there rose up a public health movement. This was the first public health campaign in this country, was drink less. And the theme was a self-governing nation must have self-governing people.
Yes.
And this is before the government got involved, which led to prohibition and all sorts of things. But this was ministers and people saying, we got to do something about this. And liquor consumption dropped. And even today, per capita, we're way off of what we were in the 1820s, 1830s. But that was a movement of the people.
Yes.
Saying this is not good for us, and we're going to do something about it, not through coercion, but through changing mores and what's acceptable and not acceptable.
Changing the heart, temperance, or a spiritual renewal. Yeah. Steve, the very first time I heard that story is when I asked you to come here to Pittsburgh to speak in 1997 and 1998. And you told that. And it's still the truth. We're still waiting for self-governance. That's, in the end, we have to be a self-governing people. No, otherwise the state grows in reaction to our unwillingness and inability to govern ourselves. Do you agree with that?
Yes. And the thing that has to be brought across, and this is where high tech can be our friend, is that it's liberating. It's liberating to be able to have devices now that brings the whole world to your fingertips. And I'm old enough to remember card catalogs and the laborious way you had to look up information in encyclopedias, which always stood in the bookshelf formidably there. Now, boom, 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 you have it. And so we have to emphasize this kind of liberation. These instruments are to liberate you to have a richer journey in life. And another thing we have to get across is that life doesn't go in a straight line. And there are going to be failures along the way. There are going to be setbacks along the way. But in a free society, you can get up, learn, and move ahead and do better. F. Scott Fitzgerald was wrong. He said there are no second acts. Well, in one sense, he's right. There are hundreds of acts if you seize the opportunities.
Well, speaking of self-governance, I promised you a hard out now. So I'm going to resist my temptation to ask any further questions and just say Steve Forbes from Forbes.com, Forbes Magazine, and especially go and subscribe now. What's ahead? I never miss this short podcast. Thank you so much for being with us. I really appreciate it.
Jerry, thank you. It was good fun. Thank you.
And thank you for the 20 years of times in which you've been willing to come on the air and talk to me and my listeners about these issues. You've always been very generous. So Godspeed.
You bring a perspective that's much needed today.
Thank you, my friend.